I just wanted to look at the data and the data surprises that we've had out of the UK, because you make the point ahead of our conversation today that some of the data has been broadly hawkish, and this does underline that. This is City Economic Surprise Index, and the yellow is the UK. I mean, this maybe has low expectations to thank, but that's the level of surprise we've seen in the data versus other parts of the world.
Yeah, exactly. And in terms of the kind of the supply side of the picture, you can certainly paint a pretty robust case for the UK economy, and a reason why the Bank of England may want to be raising rates. And the labour market in particular has been one area of real kind of consistent strength. So for the more hawkish members of the committee, perhaps like Michael Saunders, we could see them voting for a rate rise as soon as today.
Isn't this all, though, so dependent on what happens in Brexit, Daniela? I mean, is there any way to separate monetary policy from the expected outcome of these Brexit negotiations?
Well, the political outlook remains very, very uncertain, and we're seeing the impact that that's having on the data. And that's the big thing for the Bank of England is, you know, what impact does it have on the real economy? And even if a deal is done or we get some more clarity, it's then to what extent does the data bounce back? Compared now with post the referendum result in 2016, when you had very strong global tailwinds, those have now turned into headwinds. To what extent will the global factors kind of restrict any recovery that we see in the data in the UK? And to what extent has there been kind of permanent damage done as a result of Brexit?
And what about the rate of expectation that we've got in the market, or the extent of expectation, rather, around rate hikes? You make the point that the market sees just one hike in the next 3 years. Does that dictate how much pushback against a sort of dovishness we're going to see from the Bank of England today? Do you think they'll be happy with that level of expectation, or do they want more hikes priced in?
The Bank of England faces a real dilemma, and it depends to what extent they take a kind of glass half full versus glass half empty approach to it. And they may well want to keep the possibility of a rate hike in 2019 very much alive. And we've got, you know, less than 50% chance, which is currently being priced in. But I think the big question is, you know, will they be able to deliver that hike? And we're of the view that they won't be able to raise rates either this year or next. And when you look at the demand side of the picture, the story is a lot more mixed. And we've seen weakness in the housing market. You know, to what extent is the growth in the first quarter of this year been because of stock building ahead of the 29th of March Brexit deadline? We've seen some weakness in the service sector through the PMIs. We'll get another number of it tomorrow on that. And consumer confidence is very low. So there's plenty of reasons which will stop them.